traders, welcome to the TMT stock market strategy video for Monday, July 11th. Okay, FOMC minutes are out of the way from last week. Non-farm payroll numbers are out of the way from Friday. And what do we have? Well, we have a crazy market, to be quite honest with you. We have equities up on Friday, we have bonds up on Friday, and we have gold up on Friday. Now remember, last month when jobs were only 38,000 shares that were posted, gold exploded to the upside and equity sold off, right? And bonds exploded higher, right? So what happens? Now we have the opposite. We have a big beat, by the way. It was 165,000. They actually posted, I think, 265,000, 100,000 more jobs that were created. Again, is it a one-hit wonder just like last month's dismal number? We don't know until next month. However, all of a sudden now everything is great. So there's a big problem out there. There's something big brewing here, guys. I am not a conspiracy theorist, but I will tell you, 29 years doing this, having to see, and every once in a while you do see the inverse correlated assets like VIX and S&P, and sometimes they do happen to run up the same. But this has been going on for quite some time now. We have bonds at 20-year highs. We have yields at 20-year lows. We have the markets making new highs, and we have gold just does not go down. So there's a big problem out here, and we don't know which way this is going to end. Now, I showed you pictures on the 20-year bond. We had a 20-year uptrend line. I showed that to you extensively in the Pro Trader Premier video, guys. Check it out, 49 bucks. Go to the website, TMT Stock Market Strategy videos. Click on that and take a good look at it, because it's, believe me, for $49 you're getting some invaluable information. We're also going to be adding the VIX with some VIX actionable areas as well. So something to think about. So we have the markets here going nuts and going crazy. Now, what happens when bonds are making 20-year highs and equities are making 20 highs? Well, somebody has to be wrong, okay? And that's what my point is. You can't have bonds and equities continue to go higher. So money's going to come out of one or the other. And this is what we're trying to figure out here, right? This is what we do as traders, try to piecemeal our technical analysis and try to put the bigger picture so we can actually trade with confidence. And that's how you, even if you're day trading, you still need to know what the overall picture should be. And I try to put that out in a free video for you guys. Okay, so bonds have been ticking higher. They're extremely extended. Not as much as equities, and I'll tell you why. Because we had the Brexit sell-off. Yeah, now we're extended, but we're not that quite extended yet, where I think that we might have a short-term, maybe, just maybe, put in a short-term top, but we need price to tell us. The TLT, if you want to look at that, or the ZB, that's a 20-year bond. You can look at that, and if bonds start to come off, money will come out of bonds and push equities higher, and not only challenge the highs, but make new highs, okay? And that's what I'm looking at right now. And I mentioned before, I said last week and a couple weeks, the bigger move is going to be to the downside, the bigger move. But the upside move, we could challenge the 2134 in the ES and even go higher. It's very well possible, but I do the bigger correction is happening, is actually going to happen soon. I believe sometime in 2016, if not by September, October, the latest. That's where I'm looking for a bigger correction. Okay. Now, why do I think that the markets may move higher? Now, it doesn't mean, and I'll give you. Let me give you some historic points here. Usually, non-farm payrolls when they come out, and for instance, this case, the market moved higher. It usually reverses and goes the other way, and actually starts to sell off a little bit. And that's why I think why bonds and gold rallied. It was, quote unquote, thin to win, very light volume on a Friday, summer Friday. Everybody's out in the Hamptons and the Jersey Shore and wherever you live, out to your beach houses or mountains, and that's where I believe that everything just kind of went up higher, and the algorithms just lose their minds and just continue to buy everything up to the stratosphere. So that's why I think it's happening. But we'll see what happens Monday and Tuesday and see if we get a little bit of a pullback. I do think the pullback will be bought, and I do think that the markets will go higher again. It doesn't matter the fundamental picture. Earnings are dismal. We know that. We're at all-time highs. There's absolutely you can see the jobs aren't really being created. Participation rate is horrible in jobs numbers. So it's neither here or there. It's what price is telling us as traders, okay? I could sit here all day long and tell you why price shouldn't be up here and why the market shouldn't be here, but it's not my thing. I'm looking to make money and pull money out of the markets, right? So, and that's also what I'm trying to pass on to you guys, okay? All right, so let's go into our analysis and why maybe, just maybe, that the markets will probably make new highs and challenge the highs. And eventually, I do believe the bonds and gold will at least come off for a breather. Not saying we're going to crash, but for a breather. All right, VIX. And by the way, we are putting together our, we have a VIX trading program that we use exclusively at TMT, but we're going to put it out to the market participants and subscribers, and we'll also put in a premium video with actionable levels, and also we'll be putting it in the trading room as well. All right, I showed you this here. Every time we get outside the band and we close back in the band, that's going to be a sell signal in this case. And then if we do outside the band here and close back in the band, that would be a buy signal, okay? So right now, is it on a buy signal? No, it's not on a buy signal, but it's getting close. I need price to break down one more time, or maybe 2 days, and really take out the low. Now, the low, I believe, is 12, I think it's 1245. I'm not sure the old-time low, or maybe even 1155. I'm not sure about that. Go into a historical chart and take a look at it. But if we could challenge the old-time low or even take that out, you see how overextended we are here? You know, we are on the CCI, but we're not too extended. Like, this is extended. All right, MACD extended, and look at and let me just bring this up here. RSI is not even close to being below 30. So if we can get the market for another day or two to pop up, or even just sell off, consolidate, and then run up again, this will bring the VIX at all-time lows and create a big buy signal, and that is going to set up for a high probability trade to get long VIX, okay? And again, I put this out extensively in our premium video. All right, NYUD. As you can see here, this is a trusty advanced decline with volume. Lower lows, lower highs, yet again. Lower lows, lower highs, again. Just cannot take out any of these swing highs. You could see here we had big move to the upside, and we just can't get up above it. This is concerning to me as a technician to see, look, if everything's going to go to new highs, how come our breadth isn't really doing that great? That's a concern of mine. All right, next is the S&P with ATR, average true range. Is a good gauge of expansion of volatility, and it's elevated. It's not elevated to a degree where we're so overbought. But you could see here that when market starts to run up and the ATR runs up, we get a big sell-off. Same thing here, we get the sell-off. Now, this has not happened as of yet, but how far does it have to go before we start getting the dumpage? And I think we got to get back up into these areas here. If that happens, then I would say watch out for a top. And that's what I'm going to be watching in the coming days and weeks. All right, now let's take a look at the VXX. You can see here we took out the that local low here, and now we're making new lows. We're not outside that Bollinger Band yet, but another 2 or 3 days of buying will push this to probably all-time lows. And this would be a great opportunity to look to start buying VIX. And of course, if you're buying VIX, you want the market to go down. Therefore, you'd be selling the market short as well. All right, and I want to show you a weekly picture. Here's a weekly picture, guys. This is a concern because this is a uptrend line since October of 2012, the election year of President Obama. And look what happened. We are now below it. We tried to break it. We failed. We didn't even get close to it here. Okay, this is not a good sign at all that we can't even get up to this level. And we got major resistance up in here. Okay, so, even if the S&P, despite it, gets up to 112, 61, 113 even, and make new highs, I think it'll do exactly what it did. It'll back over here. It'll pop and then drop. All right, but again, we need to let price tell us what to do. Here's the daily chart of spiders. All right, so that head and shoulders was almost met. It was 197 actually. We didn't get quite there, but I took it all off because it's over now. But you see here, we've been in a range for how long? We've been in a trading range since middle of March. Okay, from let's call it 199 to 212. So 13-point range. And if it starts to take this out, and we got a gap area here that needs to be filled, don't have to happen right away. And also we have a gap area here. So it wouldn't surprise me if the markets roll over along with bonds and equities, taking a little bit of a breather, and then get back maybe to 208, 210, and then really rip to the upside. Okay? Here's that 60-minute chart. Just want to show you. Now, all of the shorter-term time frames have inverted head and shoulders, okay, which is bullish. Okay, here, and now let me just map this out for you guys. Again, we show it on the premium video. See, this is inverted head and shoulders here. Real nice head and shoulder. And here's your neckline coming in right here. and it broke the neckline. I mean, it broke it. Now, you take your high to low and you project it. You know, you're looking at, I believe it comes out to around 215 in the spiders. Okay. Now, does it have to happen? Of course not. But MACD, RSI really looking constructive of higher highs and higher lows. So it would not surprise me. Do I want the market to consolidate or even correct? I think it's so healthy for the markets because then everybody can build up their portfolios and look to buy some good quality stocks and hold them. You can't hold them here. Look what happened with the Brexit vote. You'd be crazy to hold it unless you have no choice, meaning you have a wealth management account that you're building a long-term, a portfolio. That's different, but I wouldn't add anything in these crazy markets. Here's the IWM, guys. You can see here. Um, we didn't even get up to it. And here's our secondary leader. A lot of overhead resistance here. And this is just a chart I wanted to show you of what we put out in our premium video. Okay, and these are these actionable areas here, right? And here's the transports. Last one more before that. Transports. What is our leader doing? Not leading, that's for sure. Lower lows, lower highs, and this can't even get above the 200. So this is the main leader. This is the bloodline of the economy. When goods aren't being delivered, what is that telling you? Nobody's buying. Okay, so the economy is slowing. This is not a good sign. So there's a few little red flags I showed you with the breath, and of course the transports and the IWM, which is the main leader and our secondary leader. But something that we need to take into consideration. Okay, remember, price is king. Price is what pays us. So here we have a lower high, lower high. And then here now the technology actually did very well this week. So I want to see it take out this local swing high here, and then we could probably go up to the races, challenge this area, and at least challenge the high here from back in November, December of 2015. Okay, hope it helps, guys. But again, let's see what happens today going into Monday's trade. And I do believe, like I said, historical pattern. Usually we get a little bit of a reversal going into the new week of post non-farm payroll numbers. All right. Have a great day, and we'll see you tomorrow. Take care.